Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 5:20 in New York. It is Wednesday, 24th day of July 2019, and this is the Daily Report for Gold and Silver. Interesting action in the precious metals markets along with U.S. equities as both move to higher values in tandem. And that truly is a rare occurrence because typically when you have a solid risk-on environment, people are moving money from the safe haven asset class group over into equities, which intrinsically contain more risk, and vice versa. There are very few market scenarios in which they both move higher or lower in tandem, but one of them is the belief, the assumption that interest rates are going to be lowered, and that effectively is bullish not only for equities, but obviously the precious metals. Now, the industrial precious metals, meaning silver, platinum, and palladium, have both elements working in their favor, and that's why we have seen such a nice performance in silver and palladium. Platinum has been undervalued, but that is playing catch up. Let's take a look at our current pricing. We are looking at the current winner in terms of percentage gains in the precious metals complex, which is platinum, up 2.34%, currently bid at $881.80, and that's after factoring in today's gain of $20.20. In terms of the next in line, that would be palladium, 1.41% in terms of the gain, $21.40, $1,540 per ounce. It is by far the most expensive metal in that complex. After that comes silver, and silver has just been a runaway freight train. It is at $16.63. It gained almost a full percentage point, a gain of about 15.5 cents or 0.93%. And then last, the laggard with a respectable gain of about $4.50 is gold, $1,426.20. Let's take a look at our current technical studies. Although gold had the least percentage gain when looking at silver, platinum, and palladium prices, the precious metals complex, it nonetheless did have a respectable gain today, a gain of about $4.50 at $1426.20. That is current pricing. What we have seen is a dollar going from nominally higher to unchanged and actually 0.02% lower on the day, although the last is still above 97. That's a key level that we want to watch. There was a clear and utter failure to be able to push through these record highs that were achieved last week. This large red candle being Friday of last week and Thursday of last week, which was the first time we really saw prices push aggressively above the former levels that we were looking at 1442, which is this candle here and this candle here, as we saw gold actually break above that. However, we had a collapse in the market. In other words, the red candle signifies that it opened near the high of the day and then closed dramatically lower. The following day, meaning Monday, after a weekend in which traders could really assess the scenario, we saw a very, very narrow trading ranges. One of the most narrow ranges we have seen, approximately $8. That was followed yesterday by another slight decline and today by a moderate gain. So we know that there is real resistance right up at this price point. However, at the same time, we must say with some certainty that when we look at our lower level trend line, which has been a support line, and you can really draw it just off of these two lows here. Of course, it's very close to this low right in here. But what we can say is that it has, in fact, maintained a price point above that consistently. We've not seen it dip below that. The same cannot be said for the upper level former resistance line, which I believe is been oscillating between a new support line and a new resistance line. So for example, today we did in fact close above it. Yesterday we closed slightly below it. What that tells me is that we have a market that is consolidating with a bias to the upside. We have to be aware of that factor. So a matter of positioning ourselves in the market is whether or not we think gold is going to weather some sort of a correction after hitting these record tops here and having a rally, which in essence moved gold pricing $162, a rather sizable move. typically in a gold rally is anywhere between $200 and say $240. $162 is definitely in the upper end of that range. So we want to watch this market very carefully, because if in fact it is able to trade and hold above this price point, I think we might have avoided some sort of a correction. A solid break, of course, could take us to the price points that we talked about. Most logically, it would be either $13.92, $13.73, and of course, $1400 is a key psychological level. But we haven't challenged even that as of now. It is for that reason we will maintain our neutral stance in the market, but we want to look very carefully as to where pricing goes from here and whether or not it trades above this key trend line. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.